Hello India, from sunny Scotland. Thank you very much for inviting me to speak at the Risks in Emerging Market panel. I am sorry that I can't be there, but I've been asked to say a few words talking about risks in emerging markets and some of the trends that I see as important in the market today. First of all, thank you to CEEW for this invitation. Thank you to MNRE, ISA, Shakti, IEA and all the partners in this conference. So obviously the big story of the day is the continued drop in solar module prices. We've seen the changes in rules in China, which will probably lead to a further oversupply. We've seen prices drop down to $250,000 per megawatt in module prices. Unforeseen, amazing drops in prices. We've also seen continued lowering of bids internationally. We've seen a 2 US cents per kilowatt hour bid in Nevada. We saw the bifacial bid by EDF and Mazda in the Middle Eastern markets, less than 2 cents. So we see continued drop. This is obviously not necessarily true for India. We've seen slight price rises and some concern about the continued drop in prices. But I think this is offset by increased drops in solar prices that we've seen, which weren't expected, and we're now looking at a total module price drop in 2018 of 35%, unprecedented. So I think as far as risks in emerging markets are concerned, I am a financier. I spend my life on investment committees in the US, in South Asia, in Africa, in Europe, investing in renewable energy projects. So when I look at risks in renewable energy projects, I'm largely focused on challenges that we see in the financing of these projects. First and most important risk that I see and that I encounter in all of the projects that are outside of developed markets is that of Forex. The second biggest risk is in most domestic markets, there's a lack of debt. And when you're looking at a renewable market or any market where technologies are developing, the market is developing, risks are dropping, one starts off with equity, high-priced equity, one moves to a blended finance of equity and debt, and lastly, one moves to a predominantly debt market. And the final development or the final maturity of the market is using capital markets. And as one moves up this development scale, we see the average cost of finance drop. So when margins are very, very high, financing costs over a long-term project matter a lot. And this is really the area that I see that the Indian market can make progress in the next 10 years. One of the markets that hasn't had access to debt and where there is a very large debt requirement is the rooftop solar market. And we've been doing some work with some Indian partners looking at what are the opportunities to bring the capital markets into structures. In order to satisfy the capital market requirements and invite institutional investors to invest in this market, you need two things. One, you need scale and you need spread of default risk. And in order to do that, you need to create securitization vehicles which allow a large aggregated volume of debt to be sold to the capital markets. And secondly, you need a large enough portfolio. And in order to do that, you need to standardize project documentation. So this is one of the areas where I see development will happen in a number of the emerging markets, and probably India is the market that'll be ripe for that in the near future. In terms of emerging markets which are exciting, I think one can discount China as being an emerging market. A lot of people still call China as emerging market. In my view, China has emerged. It's the largest renewable market in the world, continues to be so, and has been for many years. And I think as far as emerging markets are now concerned, India is the behemoth of the emerging markets, just in terms of scale and rapid deployment, and in terms of solar irradiation opportunities. India will continue to be the biggest emerging market. There are two other emerging markets which are interesting. In my view, there are many which are interesting, but the most interesting in terms of solar, I think due to the recent regulatory changes over the last 2 years and the greater ease of investing, Mexico has become an exciting market. And then on onshore wind and in the solar market, we like the look of Argentina at the moment. There are many other markets that are exciting in emerging markets. South Africa is back after a changing government and the signing of the PPAs. Chile continues to be an exciting market. But I think as far as investors seeing opportunities, new opportunities for investment, I think India, Mexico and Argentina are top of my list. So that's all I have time for to say, and thank you very much for the opportunity, and I hope you have a fantastic conference.